What's going on, guys? Nick Dark here. So this is going to be a video on a full chart breakdown. The pair is going to be CADJPY, so CADJPY, and we're going to get right into it. So I'm just going to basically give you guys my perspective as I'm breaking down this chart. So first thing I want to do is start off on the highest time frame. It's called top-down analysis. We're going to start on the monthly and work our way down gradually to the lower time frames, like the 1 hour, 30 minute, and start looking for entries. So first thing I want to do, go ahead and find some key levels. So I'm going to do this by looking for certain areas where price action has reacted multiple times. This area looks pretty good, 98.5. Right, we have a touch here, a couple touches here. And you can always come back and adjust. These levels aren't, super like, oh, price action can't cross these levels or not. You can always be jumping back and forth between like the line chart and the candle chart. To kind of see where price action is lining up, how much it's overlapping, how it's touching these levels. And this one looks pretty good so far. We have a lot of wicks in here as well. So let's go back to the line chart because we're not done yet. I'm going to go ahead and mark this back. So it's also good to be super neat. Simplicity is key. Sometimes less is really more, guys. I'm also going to use another tool here. Use another tool to kind of mark the trends. So I'll show you in a second, just so it's really easy to see. So you want to do monthly, weekly, daily, and we'll just do the 4 hour. We're not going to go any lower than that because once we get to those time frames, it'll be pretty easy to see how the trends are. So this is primarily bearish for the monthly. Just going to mark this for you because again, guys, we are trend traders. We're always trying to stay with the trend. That's where the highest probability trades come in. So again, bearish on the monthly, double check on the monthly time frame, right? We have the high here, lower high, and then multiple lower highs, over here where price action is currently. All right, let's see if we got any more levels in here. Let's kind of see the range. We're going from 90 to 98.5. What is that, about 850 pips? Something like that, about 850 pips, that's fine. All right, so we're actually gonna just measure 850 pips down as well. See if this lines up well. Looking like 81.5 roughly. So let me go ahead and mark it. Notice I'm also using psychological levels. Again, these are, price action is never going to stop, or it's usually not going to stop right on the pip, of that level. These are more so zones where we can anticipate some sort of reaction because we're basing it on, previous, price action history, price action data. So we can see that it's price action has reacted at this level multiple times in the past. Here, this level right here. Again, a couple times in here and multiple times over here as well. So we're going to just double check over on the candlestick chart. Yep, it's looking good so far. We're actually going to do one more level down just so we have a pretty good base. Pretty good support level down here around 850 pips lower. It's looking like 73. Again, nice psychological level. This is not a coincidence. These levels have a lot of importance, as they are. Just that psychological level. So again, 73, right? Looking good so far. Look how it's touched down here. Let's double check on the candlestick chart, right? Multiple times it's touched. Once, 3, 4, 5, or 2, 3, 4, 5, 6. Multiple times, and then in this area as well. So let's jump back, and we're not quite done yet, right? We want to break these levels up. Find some more, we have to label them. And then we have to find the weekly levels. Let's do that. Again, 850. Right, about 850. So we want to get somewhere in the middle. 425. Oops. Again, I like even at whole numbers because, again, it's these areas. You don't want to get too hung up on, like, oh, it's right here at this level. It's at 77, 178, and this is the last, if price action goes one pip over, then it's going to take off. No, it's not it at all. So it's more so areas. Okay, so let me just keep labeling this. Let's find 425, right? It's half of 850, 425 area. 425, so this is looking like 85, 850. 85, 850, looking good. Weekly, right? And then one more time, because you want to just kind of stay near recent price action. to find this level first, I wanted to find where there was the most, reaction of these levels. But then, you don't want to be all the way up here marking levels, because that's not relevant to, current price action. So I'm just doing this for the sake of analysis. Okay, let's do 250. 94, 250. Okay, so that's good. We'll label it as a weekly. Okay, and then you also don't need this many zones. As you get more advanced, you can get rid of these top few and just stay where current price action is. But for now, this will do. Let's double check our work here. Looking pretty good so far, right? All these zones seem to be respected relatively. Looking good, not bad, not bad. I am, however, going to mark this zone right here because I see this as the most important. Currently, where price action rejected from multiple times. Huge zone, right? This was resistance for so long. Bit of a fake out. It actually came back up, hit this weekly. And then again, once it broke through, it tested a support multiple times. This is more or less a giant monthly head and shoulders pattern. Okay, so that's why I'm marking this level. Just something that's kind of jumps out at me. And then this would more or less be the neckline. Right, I want to see bullish to bullish. The absolute extreme of it would be down here. Bullish to bullish. Right, this is like one hell of a neckline right here. If it were, so this would be the supporting trend line. Right, you guys see that? Very clear supporting trend line of this head and shoulders pattern in this overall super bearish trend. Okay, I'm not too big on just drawing random trend lines, but for the sake of analysis, again, here we are. Let me draw this one in. We'll take a look. So pretty big ass pattern. Pretty big pattern. Again, and this all makes sense, right? So primarily bearish. So far we have this, on the monthly. And this neckline is breaking. This was a key level here. So let's go ahead and drop down time frames. It's about time. Let's go to the weekly, see what we can spot. Any other patterns, how price action is reacting at these key levels. So again, super bearish, right? I think it's pretty safe to say that this was a high. We have a double top spotted here, lower high, lower high, and then these are all highs, and then a drop. So we're going to go ahead and say weekly is bearish as well. So far we're looking at a lot of bearish momentum. And this level in here, this monthly, I'm going to highlight this just because this is such a key level as well. We can just see how price action kind of danced around multiple times. There is a pattern in here. Looks like an inverse head and shoulders. Pushed back up for the high and then failed. And then take a look at this. I'm going to mark this level, the structure, right at 750. Blue. Let's do 750. Right, so you can see this level here. This was a little bit of a bullish channel here. Right, a little bit of a bullish channel right here. This was that supporting trend line. Here's that channel. It fell out. Right, it broke this level of structure. It broke this higher low here. And then formed a lower low, and then a lower high, and then we're starting at lower lows, lower low. Then we have a bit of a bullish channel again here, but still. It's just matching this high, so it is still primarily bearish, right? And then, boop, we get a bearish engulfing, blows through the monthly with good conviction, good momentum, and then continues lower. So we are going to stick with this bearish sentiment right now. Let me just go ahead and mark something. I want to see if this is a channel, if this makes sense. Yeah, it would be. It's a pretty wide channel, but just for the sake of clearing up the chart, I'm going to delete some lines. I'm going to get rid of this. I'm going to get rid of these levels up here, just so the chart looks a little more clean. All right, I'm going to get rid of this trend line. That's like the monthly head and shoulders neckline. So let's get rid of that, just clear it up. And we're just going to focus on these support and resistance levels. So right now, our main levels are this monthly, which was recently broken. Remember, we're still in the weekly time frame. We still have a lot more to get through, but this is the weekly, this is the monthly support that had been broken. Now we have a large drop. This is a new lower low. We're going to go ahead and fib this. It's super clear. However, there is a gap there, not our favorite. So I'm going to go ahead and do it right from that one. And this is more of a daily fib, so I'm going to drop down and then actually get the fib on this. So we can drop down to the daily now. All right. So the daily is looking, let's expand this a little bit. All right. So clearly the daily is still bearish, or is super bearish as well. Let's expand the chart a little more. right? Super, super bearish. So if we look on this daily time frame, we can see that this was a lot of ranging happening right in here. Let's go ahead and mark this up. Right, so this was that area where price action was ranging. Didn't really have enough conviction to break through this level. However, it did break here, right? We have a fake out here. We have a little bit of a dip here as well. But it just consolidated every time after it dropped. And it never really, broke these, like you could just see here. If we just look at this consolidation, it broke, consolidated, and then it established this low. So it's like, this is a nice little box pattern in here. It needed to get through this low. Let me mark this up. It needed to break this low with significance, but like it didn't. It just gapped. It gapped lower and then came right back up. It never really got through this, this little box here. So this was the absolute low that it had formed, and then it came back up. Right, it broke the high here, and then continued back up into this monthly to test the monthly again. And then it actually came back and tested this, the top of this box as support. So it actually gave us a higher low here, and then found conviction, pushing back up into this upper range. So let's go ahead and mark that this is bearish. So this was a ranging market until this drop happened. Because again, it was stuck between this range. It didn't break this lower high here for a bullish transition. It didn't, continue with the bearish trend. It didn't significantly break this monthly to then say we're significantly bearish. We're now in a clear bearish trend. That didn't happen up until here, this point here, where we saw a double top and then momentum just picked up and then pushed price action much, much lower. You could even see it pushed out of this monthly with good momentum. It gapped, came back up for a retest off the MAs, right at the monthly, pretty much almost at the pip, and then gave us another bearish engulfing, and then another bearish engulfing. So there's tons of momentum in that. That would have been a great entry, especially on this first bearish engulfing. That would have been a really good trade. Target towards significant support levels. So like just for the sake of marking this up for a trade example, would have been something like this. Again, this is the daily time frame. You don't enter on the daily. But this would have been, an indication to drop down time frames. So we would have targeted at least here. Stop loss would have been outside this monthly. It actually would have been more so. There's probably an engulfing in here. We'll get to that in a second. But again, you at least want a 2-to-1 risk to reward. You could have targeted this weekly and potentially this monthly. So right now, we have a lot of consolidation here. This is looking, so like it's kind of hard to read because you could actually see these gaps. There's a lot of gaps. It pushes up and then it gaps lower by, right around this weekly. We have another gap right here. Let's see. So kind of hard to read, but let's go ahead and mark this off at the high. Look at this giant gap as well. So let's just see if there's any sort of pattern. We got to mark this up. Give me a second here, guys. Let's see. So yeah, it does look like it's a bit of a pattern here. This was like, it looked like it was just a triangle on this daily. Yeah, that looks pretty good. So it's a bit of a triangle here. This was the low right about here. We wanted to see, a clear break. Let's see if 75 is a better area. Yeah, 75 is a better area. We wanted to see a clear break of this, a clear break and retest. So like, if this was going to be a continuation pattern, we wanted to see, a break below, retest, lower highs obviously on these lower time frames, and then a continuation to the downside. That would have been really nice, and that would have confirmed this pattern as a continuation, but we didn't see that, right? We're starting to get higher lows in here, and in fact, we're breaking this weekly zone. It broke this weekly zone, it broke out of this pattern, hit the weekly, came back, tested, MAs pointing up, found support, and then took off. So, it actually did reverse from this level after all this consolidation. Usually when you see a giant push and then this much consolidation, like it really lost its steam here. Again, this is from March all the way until, May, mid-May, early March to mid-May that it consolidated. So that's a lot of time. And when you do see that momentum kind of like, it makes a huge push, there's so much momentum, and then it just kind of dies off. That's not a great sign. Oftentimes that does end up in a reversal, like we just saw here. Clear break and retest. You could even get a lower time frame zone right here for structure. right about 76.75. 76.75. Let me go ahead and mark this as blue, because that's structure, right? And I'll do this one as well, blue, so it's easy to read. So, yeah, so this is what happened. It just kind of popped out, and look how well it respected. Broke, tested, took off. Very, very clean, pretty easy to read. Would have been a decent trade opportunity in there as well. Good risk to reward if you were looking for that long opportunity. So let's go ahead and jump down even more. Actually, hold on one second. I want to throw a fib on this move. So from the daily up here down to here, right, 0%, 100% high to the low. Retracement, now we're at the 38.2. Potential to come back all the way up to the 61.8. So this is very likely. This area all in here, I'm actually going to draw it from the 61.8 because the 200 EMA is there as well. This could retrace all the way back to the monthly. And I'm going to highlight this in yellow. Get rid of that box. We don't need that. The border, rather. Okay, so there's a lot of potential for this to pull back. Right, this is a large bearish leg. Now we got consolidation. We saw the break. The weekly is now support. We're at 38.2. It looks like it has enough momentum to blow through this area. We still have a few hours left on this daily time frame, or in this daily candle. About 4 hours, but still, it's looking like it's got the momentum. Depending on how this reacts, will determine, what could be the next move for, CADJPY. But for right now, it's very likely that we either see something like this, right? And there's a micro level in here, but that's kind of like right where the weekly is. So we could see a little bit of pullback to the weekly and then a continuation higher. Look to enter on bullish engulfings, bullish variations. This is very, very likely before we see this daily time frame continue. So this yellow zone could definitely be where price action pulls back to. Let's see. This area is looking pretty hot right now. And then we would get that continuation, because this is definitely due for a retracement, especially after this loss of momentum. Right, and then here I'll throw in a supporting trend line for this little push here. Draw this for right there. Okay. Continuation higher. Yep, looking pretty good so far. So nothing here is suggesting bearish momentum other than the overall sentiment. But for us to get into a bearish opportunity, to spot a bearish opportunity, we really need to see a break of these levels right at 76.75. Back below this weekly for sure. So let's go ahead and clean this up a little bit more. So to get in this trade, we would need to see this, right? We need to see a break below. We need to see a lower high form at this current area with, again, strong bearish confirmations, strong bearish setups. So what is this going to look like? I'm going to make this orange because this is not the preferred path right now. This is a potential scenario, bearish scenario, but it's not the most likely based on current price action. So we want to see something like this. I want to see price action get below here. I'm going to put a price label on this. Let's see. 750. Okay, so we want to see it get below 76,750 to then start considering, bearish opportunities. And it would look something like this. Get in on a lower high, right? Protect yourself with a good stop outside the weekly, and then target down towards our next major support, which is our monthly down here. And this makes a lot of sense. There's a 3.67 or 69 risk reward. This is actually should be, where is it? Where's our stop? We want this to be 100. Good. So this is, and then what is this down here? This is going to be 365. 365 pips. Pretty clean. All right, so then there it is. 3.65 risk reward. 100 pip stop loss for a 360 pip potential gain. So looking pretty good. This would be a really good trade if we saw it break lower. But, again, the flip side to this, if we see this, come back down, find support again, continue higher, this is what this trade would look like. Potential long opportunity off this weekly, target back up to the 61.8, call it 350. Whoops. Okay. Call it 350 pips from this level. and then your stop loss would be, below structure, below this weekly, outside the 70, 76, 75 area, about 100 pips. So it's looking like, very similar trade opportunity in either direction. We're just waiting on these confirmations, right? So it's looking pretty clear right now. Let's go ahead and drop time frames once more, see what we could find on the 4-hour. See how much sense this makes. All right, so again, the preferred trade path is with this 4-hour bullish trend. So I'm going to say bullish for the 4-hour. Okay, and let's zoom in and see what we could identify here. All right, so this clearly broke out of this channel here, out of this pattern here, right? Gave us a little higher high, higher low, continuation. So let's go ahead and fib this. I'm just going to walk you through the fibs of this and which levels were hit. So let's go ahead and go from the low to the high, right? Bullish wick to bullish wick, low to high, came back and hit the 61.8. Look at this. This is crazy right here. It's perfect. So this was a big confluence area, right? You have the 200 EMA, see it? Came back through we had an MA cross to form structure down at the 61.8 fib level, as well as this key structure level right here at 76.75 that we've been talking about. And then look, it kind of stopped on a dime right in this little pocket on the supporting trend line, and also at the trend line of the top trend line of this pattern, right in this pocket. So much confluence, definitely a great area for potential entry. And then there it is. There's that morning star. Tons of exhaustion. That was the low. These wicks to the low, wick to the low, and then we start getting a push higher. And we finally saw a break of this wick right here on this candle, even though it does look like a shooting star, which is not, the strong, obviously not what you want to see on the beginning of a, of a rally. So the conservative entry probably would have been more so in here. As you're getting these lower time frame bullish engulfings, on a 1 hour, a 30-minute, there's some entries in here. That's where you'd want to enter, especially on this candle right here. Especially on this. Oops. Especially right here. You guys can see this very clearly. Let me bring this up. So that would have been a potential good entry. Again, stop would have been well outside the 61.8, outside that structure level, outside the 200 EMA, and these other MAs. So you would have been well protected. And then you would have targeted. First target would have been the negative 27 fib level. Boom, it was hit exactly where we're kind of seeing a reversal now. So that was that one trade opportunity. Let's clear this up and figure out our next. So what are we going to do? Refib from the low to the high. Because again, it exceeded 0%. It blew through zero. So now we want to see, where we could potentially enter next. And what do we see happening again that lines up with our trade path? 61.8, right? And there's a lot of confluence in here as well. Again, 200 EMA will creep up by the time price action gets here. It's creeping up right now, right? Key level, key weekly support. There's just a lot of confluence here. So this would make a lot of sense if it came back, gave us an entry opportunity in this area, as well as here. So this is the previous high of this consolidation. So this whole area. So 77.5 is pretty important. It looks like price action held a bunch of times right here before, it found resistance, key resistance in this area before it dropped and then broke through and then tested again real quick on the back side of this candle. So this whole area, there's definitely a lot of potential. It was the wrong arrow. Definitely a lot of potential for price action to pull back into this yellow zone. So any type of bullish variation in this yellow zone would be enough to enter. Right, especially after you see a good pullback. So this is looking like a really good trade, and again that lines up with our our projection almost exactly. So let me just extend this, make this a little cleaner for you guys right here, and we're looking for a pullback to this area, 77.5. Okay, and then this area here. So yeah, we want to see a clean pullback, and then we'll target higher. TP is associated with deeper fib levels, negative 27, negative 61. So these will be some of our TP levels, as well as this overall higher time frame, monthly resistance level. And again, up here, this yellow zone, how we highlighted on the monthly, would be a retracement of a larger move. So this would be the 61.8 retracement of this giant bearish leg. Makes a lot of sense, especially with the momentum that we're seeing on this 4-hour. So it's looking pretty good. Looking pretty good so far. This is that entry opportunity in here. And you know what? For the hell of it, let's go ahead and drop to the 1 hour. Give you guys a little more insight. And I'm going to clear this chart up just so we can see a little more clearly. All right, so let's jump to the 1 hour. All right, we're on the 1 hour here, supporting trend line. This is that trade we just marked up. Let me actually bring this in so you can see a little better. Okay. And there it is. Okay. So again, I use, trend lines relatively. They don't necessarily have the most weight to them. Even if this does break, I'm still going to be looking pretty long on this. Especially if it comes down to this pocket too. But again, trend lines, even if we got rid of this, our trade projection would still be pretty much the same. Whoops, did that twice. Okay, so it's pretty much the same here, just playing on these support and resistance levels. This would still be a higher low if we saw a reversal here, regardless if that trend line is broken or not. Okay, I just put it in here so it's easier to identify a channel or a trend like this. And it actually, it does sometimes help add to a confluence area. Like you can see this 200 EMA is pretty much at the same slope of this trend line, and it's right pretty damn close to it. So it's a confluence area. But actually, let's see how this would pull back to here. This would be nice to see a really sharp move pull back. You know what? I'm just gonna draw a new one. So something like this, swift move to the downside. Find some support in this yellow zone, and then we're long. So again, this is the preferred trade path. This blue line here, something like this. So what we want to see currently is this break. Where'd it go? We want to see this little area break here. Let's go ahead and mark this off. Blue. So we want to see this area break, drop lower, form some sort of structure, and then we can look for long opportunities. Because right now there is no entry. There's no entry opportunity here. This 1 hour is bullish as well. No entry opportunity, especially it's kind of overextended. It's a little bit of consolidation. We had this last final push, and then it kind of just fell back down. There's a lot of exhaustion in here. So there could be a little head and shoulders pattern that forms as well, which would be nice to for a 1 hour drop. Definitely would hint at that. We target the height of the pattern on this head and shoulders. It's about 50 pips for a drop, 55 pips for a drop, which finds us right in our yellow zone. Would make a lot of sense if we saw that happen. So guys, this is just quick full chart breakdown on CADJPY. We're looking long based on the technicals that we can see. We've broken down again every time frame. Monthly's looking bearish, weekly's looking bearish, daily's looking bearish, but we do have a strong amount of bullish momentum on the 4 hour and 1 hour. And then we're simply just going to try and ride with this trend here. It's looking pretty good so far. Again, there is a fib level right there, 38.2. So it did break through it already. So it's very, very likely that we could see this continue higher. So again, guys, let me know in the comments what you thought. And that's been a full chart breakdown on CADJPY. Thanks, guys.